866-928-3310. And we'll send you out a no obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Thursday, 15th day of June, 2017. Happy Thursday. So glad you've joined us today. If you're returning, welcome back. And if you're here for the first time, a very special welcome to you. I've got the chart up of the S&P 500 E-mini Futures. If you cannot see the chart and you would like to see the chart and any charts that we showed during today's show, and by the way, today's every other Thursday Ed, so we'll be showing some Elliott wave charts later in the show. Something we only do once every couple weeks. So go to the home page at CFRN.net. On the right hand side of the page, click the big microphone, follow the instructions, and before you know it, you'll be logged in, you'll be able to see the charts, and you'll have access to the chat box. Now, we've got a global audience. So if there's ever something you wanted to tell the world in a nice way, now's your chance. Thoughts, ideas, rants, raves. It's open season. All you got to do is log in. You can also take the easy way out. You can go to youtube.com/CFRN click the live button and you'll be live. And there's a chat box there too. And thanks to modern technology, I can also monitor that box as well. So, Thursday, always a big day here. The CFRN headquarters. We have a partners meeting tonight, a workshop, 9 p.m. Eastern, as we do each and every Thursday. And I just got a message from Ed that he will be popping in at quarter till. That would be 12:45 Eastern. So let me shoot him an OK. And we got a date. All right. Now, we all grew up knowing that there was always room for Jell-O, right? Right. Well, apparently, there's no room for a decision in the Bill Cosby trial. The jury tasked with sealing Cosby's fate has deadlocked after 30 hours of deliberations. After 6 days of testimony and closing arguments, the 12-person jury has been deliberating whether the popular entertainer is actually guilty of giving drugs to and molesting former Temple University employee Andrea Constant more than a decade ago. I don't know if you guys saw that TV show where there was like a whole room full of women. I don't know how many were there. I don't know, 30 or something? All accusing him of the same thing. But apparently the prosecuting attorney decided to just narrow it down to one victim. And on Thursday, the jury entered into its fourth day of deliberations and announced that it cannot arrive at a unanimous decision despite extended deliberations. According to the Associated Press, Judge O'Neill told them to keep trying. Cosby, 79, is charged with 3 counts of aggravated indecent assault in relation to Constant, who first filed a civil claim against Cosby way back in 2005. Now, anytime there's a charge against you, if the word aggravated is in front of it, that means it's really bad. It's a true story. The jury of 7 men and 5 women has been sequestered in a local hotel not far from the Montgomery County Courthouse in Norristown, Pennsylvania. Due to concerns of juror impartiality, the jurors were selected from Allegheny County, more than 300 miles from where the alleged assault took place. I mean, come on. Bill Cosby's a worldwide figure. Whether you remember him as Dr. Huxtable or the Jell-O Man or a stand-up comedian, and certainly if you grew up here in America, Bill Cosby was a household word. So moving the trial 300 miles away where nobody knows Bill, I don't know. Anyway, under Pennsylvania law, a judge has the power to decide what to do once a jury announces deadlock. In most cases, the judge will simply tell the jury to keep deliberating and review the other's points of view. It's a very, very rare occasion that a judge is going to let a jury off the hook on the first indication that they're hopelessly deadlocked. Since Monday, the jury has been deliberating the evidence. The prosecution spent 5 days presenting evidence from Constant herself, as well as expert witnesses, while the defense took just over 6 minutes. 6 minutes to argue that Constant had consented to a relationship. The prosecution took 5 days to plead their case. The defense took 6 minutes. That's daring. That's risky. But apparently, it's worked, at least up until this point. While many in the courthouse have been speculating about the jury's progress, it has been couched under a thick veil of confidentiality. The jurors have been warned against talking to the media, while judicial officials refuse to tell the New York Times whether they are able to have a computer over the course of their sequester. Don't know how many of you watched the TV show Bull. It's got the fellow who used to be on the original NCIS. Gosh, I can't think of his name. Tony. Yeah, who's always picking on Proby. Right. He got his own TV show, Bull. And he's not an attorney, but what he specializes in is using mock juries and all kind of sophisticated computer equipment and algorithms to determine which juror will vote favorably, is most likely to vote favorably in favor of his client. They have what's called voir dire, not a term I was familiar with before the TV show, where they have the jury selection, and each side can say no to a juror. They're allowed so many no's and whatever, but it's a pretty fascinating show when you think about the science behind it. I'm sure some people would consider it junk science, but I've given it a lot of thought, probably way too much thought, and I think there's a whole lot to it. I think there's a whole lot of people in jail today who couldn't afford a good attorney, who also certainly couldn't afford a jury selection specialist like Bull, because if they could have afforded either one of those two things, they probably wouldn't be in jail today. Doesn't mean they're innocent, just means there would have been reasonable doubt. See, in our court systems, that's all that you need is reasonable doubt. A sequestered jury is not unlike being in a medium security prison. Over the last week, numerous commentators have compared Cosby's case to the O.J. Simpson trial in 1994, which also drew extreme media attention and required a sequestered jury. Who doesn't remember the O.J. trial? I mean, it's the first time we saw such a thing on daytime TV. While there have been no clear indications on the progress of the deliberations, the jurors did ask to re-listen to Costin's testimony, in which she described being given the pills, and asked for clarifications on the legal meaning of, in quotes, without her knowledge, in quotes, by Wednesday afternoon. At the start of the deliberations, the jurors also wanted to revisit Cosby's old descriptions of his relationship with Constant and the testimony of the Canadian police officer who took down Constant's initial report back in 2005. At this point, we can assume there is some significant disagreement, but perhaps the length of deliberation simply reflects the fact that the jury is doing a thorough and thoughtful review and discussion of the issues. The Philadelphia Inquirer reported that the jury was showing serious signs of fatigue on Wednesday, and that one of the elderly members even looked like he was dozing off at one point. O'Neill told the jury as he dismissed them, Judge O'Neill told the jury as he dismissed them Wednesday night, "This is an incredible jury that has just acted with incredible dignity and fidelity. I don't have any higher praise. You have taken your task so seriously." So the judge giving them high marks for not being able to make a decision. The jury will emerge from deliberations whenever they decide whether to send Cosby to prison for as many as 10 years, or they look the judge in the eye and say, "Sorry, we just can't give you a unanimous decision." And that's what it has to be, unanimous. And let's see, so he's looking at potentially 10 years. And I commented at some point how old he was. He's 79, so he would get out when he's roughly 89 or 90. And of course, if she wins, then I would assume that opens the door for those other 30 women that were on that TV show accusing him of the same thing to move forward with their own civil, if not criminal, lawsuits. I don't know how much money Bill's got left at this point, but he sold a whole lot of Jell-O back in the day. All right, let's take a look at the numbers. Cash markets start here in the U.S. of A. The Dow is down 24 points. NASDAQ is down 55 points. That's almost 1%. S&P 500 is down 10.5. That's almost half of 1%. And the Russell 2000 is down 11. That's 3/4 of 1%. In the European markets, the FTSE closed down 55. The DAX closed down 114. Both of those almost 1%. And the CAC closed down 26 points, exactly half of 1%. And last but not least, the Nikkei closed down 51 points. Shanghai actually is the only green market we have, up 2 points on the day. And the Hang Seng closed down 310 points, which is almost 1.25%. So Asia is mixed by 2 points. Europe is red, wall to wall. And here in the U.S., red is also the color of the day. We did not hit the commodity basket. Crude oil down 25 cents, trading 44.48 last. And gold, man, what a drubbing. Down $20.90, trading $12.55. We were so close to cracking 1,300. Now we're back on our heels at $12.55. Zowie. All right, here's how we're going to do it. Michael's going to come and give us a recap of everything that happened in the live training room today. Hopefully John will call in as soon as Michael's done. We'll chat with him for a moment. And then Ed Corey, who in a previous life was a commercial oil trader. That means where you and I might trade contracts of oil, he traded shiploads of oil. And he is an Elliotician, and he still trades today for his personal account, family office, etc. So without any further ado, Michael, if you are ready, sir.
I am ready.
Those of you that can see my screen, you'll see that on the S&P, last night's trade alert was to sell 23.43. And we got down to, it's like 24.17-ish on the first move. And then important prices, important areas are almost always tested. So we get back above the trigger, come down again, hit that same low, put in a double bottom. And we've gotten back above the trigger now for a third time. And it looks like the market's heading back down. Zone to zone to zone to zone.
All right.
Michael, how are you today?
Yes. I am doing okay. Okay, how about you?
Okay, I'm sorry I wasn't able to join you this morning, as I typically do, but had a couple things happening.
I took care of it. No big deal. And all the emails too.
Awesome.
Okay.
You're a heck of a guy.
That's what I do.
Still got to reserve that mobile issue. The problem is, well, I won't go into what the problem is, but I'll just try to fix the problem this afternoon. It's
Okay.
I've troubleshot it. I've just got to figure out how to fix it. Okay. So I can see your charts, or I can see the screen. So I'm going to hit mute on my end, and I'll talk to you in a minute.
All right. I will talk to you in a minute. Here we go. Okay. Good afternoon, everyone. Today is Thursday, the 15th day of... 15th... Sorry. It's the 15th day of June, 2017. If you have not taken a free trial with us, go to the home page here on your desktop or laptop. Go to the home page here at CFRN.net. And right here at the top, this little thing falls down. You just got to click there, and then fill out this these couple of spots right here and hit register now. When you do that, you'll be sent a confirmation link. Okay, you must click on that confirmation link. All right, because if you don't, we won't know that you took the trial. If you're doing this with your phone, you have to go to apply.cfrn.net. Apply.cfrn.net. Okay, go directly there. If you're doing it, through your browser on your phone, go directly to apply.cfrn.net. Okay. All right, spreadsheet. This one. All right. We had a red day today. We were minus one tick. We're minus one tick this morning. We were +6 on the YM, +3 on crude, and -7 on gold. And it took us 9 trades to do that. There were 2 times during the day where I could have gotten the goal, but I was distracted. Anyway, this right here is the gross monthly profit. 1331.25 over 11 days, averaging 121 a day. On the year now, 17,466 over 112 days, averaging 155 per day. Yeah, if you're going to look at this, you got to read all the CFTC risk disclosures down at the bottom. Okay. Now, on the gold, we had 1 tick profit right here, then we stopped out there, then we had a break even there, and that was it. During the break, there was really nothing. I mean, there was a momentum short right here. It didn't go anywhere. You had enough movement to put your stop to break even. You could still be in it if you didn't move your stop to break even. You should be putting it there now. But not a lot of movement there on the gold. Well, that was during our session this morning. During the pre-market, there was some good movement here on the gold. Some really nice movement on the gold in the pre-market. Those of you guys that got up early, hopefully you got your goal. All right, on the euro. Now, on the euro, we didn't do anything with the euro today. Looks like, did we? Nope, we didn't. There was one here that we missed, and I was waiting for it to get up above here before we tried to do anything with it, and it took forever to get there. Then right here, it's got a nice leg down. It's going to pull back. It'll probably give a shorting opportunity there. Okay, and that was it on the euro. On crude, we missed this first one right here. That's too bad because that would have gotten us our goal early on. And then right here, we picked up 11 ticks. Okay, and then we stopped out here. So we're +11 after that, and then +3 after this. I wanted to see it get up above this level before we went long again. And during the break, there was an opportunity to do just that right there. That would have been break even, maybe a couple ticks profit. Okay, and since then, the crude has just settled right in. The YM, let's see, we have, right here on the YM, we had a break even. Right here, we had +6. Then another break even over here. It was a real mess here during the break, but it is giving a decent pullback now, so could be an opportunity. Gosh, where did my cursor go? There it is. So there could be an opportunity in here. Okay. And natural gas. I was looking at natural gas this morning because natural gas inventories came out right here. Okay, we ended up with just 1 break even on the natural gas. And the ES is right here. And you can see the ES ran up to the zone here, and it's failed off of the zone. During the break, it had a short right there. Before the break, we couldn't have done anything here going into dynamic resistance, but we might have been able to go long right here for that ride up to the zone. Okay, and that's it. was it for my morning. All right. So back over here. If you are going to read this spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we had a red day. We're minus one tick, minus $10. Took us 9 trades to get there. 9 trades in all morning. On the month now, we're at 1331 and a quarter. That's over 11 days, averaging 121 a day. On the year now, we're at 17,466. That's over 112 days, averaging 155. That's per contract per day. Okay, per contract per day. All right, and so is this per contract per day. All right, let's go back here. All right, if you have not taken a free trial with us, go to the homepage here at CFRN.net and go to the homepage here at CFRN.net, and right up here at the top where it says click here, just click there and fill in those two slots right there and click on register now. When you do that, you'll be sent a confirmation link. You must click that confirmation link. Okay. If you don't click the confirmation link, you will not get your free trial. Okay. You must click the confirmation link. That is correct. Del. There is a space over here. Look. Over here. With an $8 commission, this is what your net profit would be on the month. With a $5 commission, this is what your net profit would be on the month. Okay? So we do take that into account here. Okay? And usually your commission is going to fall somewhere in between $5 and $8, unless you got a real discount broker, and then it could be as low as $250 or something like that. But, and that's if you executed every single trade exactly as I did. All right. Some people do better. Some people do worse. I can send you a link to it. Okay. All right. Again, if you're going to read the spreadsheet, you can read all the CFTC risk disclosure stuff down at the bottom. Okay. If you are trying to get the free trial from a mobile phone, you have to go to apply.cfrn.net. You can't go to it through the website or through the web page that we have. Okay. You got to go to apply.cfrn.net. All right. Okay. And that's it. With that, well, I can't pass it out to you, Dwayne, because your picture's not there again.
Okay. Well, I'll tell you what, that's really a shame, too, because 50% of our traffic comes on mobile devices.
Yeah, well, if they go just straight to apply.cfrn.net, that works fine.
Yeah, I know, but if they're not listening to the radio show today and hear you say those words, then
yeah,
that's why I've got to, top of my priority list today after the show has to be to get that fixed somehow.
Apply.
Okay, let me get the screens, and we'll be off
that
the races.
Okay, you have the screens back.
Yeah. I know you're all excited that Taylor Swift has decided to put her music back online. I was simply beside myself. I was there the night she became famous, I think, when she won American Idol. Back when she was just like a good kid, who wasn't slashing up somebody's leather seats with her knife and busting out the headlights in a pickup truck. She's an angry woman.
I don't think that's her, is it?
I don't know.
I don't think so.
You know the song I'm talking about, right?
I do.
Yeah, I thought that was Taylor Swift, but
no, I don't think it is.
Well, I mean, I'm certainly not going to argue with you. You live in North Carolina. I mean, if anybody knows anything about the two kinds of music that exist there, country and western, that would, I'm sure, be you.
Yes, I'm sure I heard that song yesterday at some point.
My son is taken with some kind of music. I don't even know what the genre is called, but it's all instrumental, and somehow I think it has something to do with this anime stuff. Do you know what anime is?
I do.
Okay. I think that stuff's evil and wicked, and it's got bad mojo on it. And
you think?
Yeah, and I don't allow my son to read the books or or any of that stuff, but I think this music that you find on the YouTube is associated with it in some kind of way. I'll have to ask him what the genre is, but man, and he's a very talented musician in his own right, as a saxophonist. But I'm sure that's not music they have them play in the orchestra or the band or whatever you call it. He just heard it and fell in love with it, so I don't know. Anywho, well, we do have a partners workshop tonight. Did you mention that to them?
I don't know if I did mention it, but we do have a workshop tonight.
And if you're on a trial and you want to be in that workshop, well, got to be a partner. That's why it's called a partners workshop. And when you become a partner, of course, you have access to the members area of our website, which has a new area where anyone who does a personal mentoring session, if they agree and are okay with it, we record the session and then we publish the session in the mentoring library. And I've had so many people tell me how much they have benefited from that, because listening to, and I take fairly good notes, and so under each video it tells you what we covered as best as I can remember, and I try to take notes throughout the session. And if you don't have to listen to something hoping we'll cover, you get the point. You can go right to what you have a question about and listen to that session. But they say that, he asked questions that I would not have even, that I wasn't even thinking in that direction, and it opened my mind up to a whole new way of seeing things. So very beneficial. So anyway, if you're on a trial and you do want to become a partner, I'm sure Michael has sent you an email. Sometimes they end up in that black hole of the Webiverse. So just call him at 949-423-6464, or as some of us like to say, 949-42-EMINI, or shoot an email to support@cfrn.net and say, yo, don't you start that workshop without me. Send me whatever I need to do, and I'll get her done. Okay? All right. Recap of the recap before you get out of here.
We lost a tick today. We were red.
We had a red day? Okay.
We had a red day. We lost one tick.
That is the truth about trading. Now,
Yep.
that's what you're always going to get from us, guys. We're just going to tell you the truth. Now, for some people, that's not appealing. They would rather have smoke blown up their chimney. They would rather be handed a shiny apple, even though there's a worm inside, than to have to deal with reality. Well, only the truth will buy you groceries. So, after 2 hours of trading, to be down a tick is like so much not a deal, certainly not a big deal, because no one trade, no one day, no one session defines you as a trader. And had he, continued trading beyond the 2 hours, I'm quite certain that he would have turned the whole thing around. Also, we do have other trades, and that's what Michael does when he does his Tuesday webinars, is he shows the other trades that you can use our indicators and our, thought processes for. But in the live training room, we use the one basic setup. It's the simplest trade setup I've ever seen. We designed it that way so that a person could learn it and apply it to any futures market. We use it on a range chart for a host of reasons. One, it allows us to only risk 8 ticks on every trade. But if you want to throw it on a 30-minute chart or an hourly chart or a daily chart, no rules change. And the way they behave, price pulls away, price pulls back, up, close, by the open of the next candle, plus one, everything remains the same. Except you have to compensate for the additional risk. And that's why we like the range chart, because we're very aggressive with our risk management. Okay? And there are those days that being too aggressive on your risk management, it can seem like it's coming back to bite you. Maybe in the short term, maybe in a 2-hour window, but over the long haul, it's keeping you in business. And that's most people who want to become professional traders, people who trade for a living, get blown out of the game before they learn how to turn it into a business. The numbers are astronomically high, which is why we do everything so opposite of everyone else, from our risk management to just so many things. Because if you do things the way everybody else does things, then you'll end up in that 90% line. If you want to get in the 10% line, you got to do something different. You got to do what the people in the 10% line did. They learned patience, they learned discipline. I guarantee you they had a personal mentor, someone who would teach them not only in group settings as we do every day for 2 hours, but who would sit with them privately, personal, one-on-one, and get them through the rough spots. And each person has different rough spots, tough spots, whatever you want to call it. And that's what we pride ourselves on, is once you become a partner, we still answer the phone, we still return your emails, and we actually meet with you for the private mentoring sessions. Because we really do want to see you achieve your objective, whatever that is. So, anywho, 949-423-6464. And for those of you who've never taken our trial, as Michael said, apply.cfrn.net. I know we've all been in rooms where the moderator's snarky, chops your head off if you question his all-seeing eye, and often makes you sorry that you asked a question. We don't do that. We treat everyone with dignity and respect. And all we ask in return is that you treat us the same. That's all. So, with that, Michael,
Yes.
wow, look at those soaring gold, silver, and platinum markets. John must be making a lot of money, just joking. Sad how they get caught up in these bull traps again and again. Do they even know the difference? Yeah. We know the difference, Jim. It's been a long time since you dropped in and cracked me up. So thanks for stopping by. God bless you. Hey, John, what's up?
Hello.
Welcome
Jeff
to
coming
the
on today?
show. I'm sorry.
Jeff, is it Jeff who's coming on today?
No. Ed Corey. Ed Corey, who used to trade crude commercially, and he's our resident Elliotician.
What time is he coming on?
He'll be here in about 5 minutes.
Oh, okay.
I sent you an email.
Let me do a quick round.
Yeah, I sent you an email.
Oh, sorry, I didn't.
That's
I didn't
okay.
read it yet.
That's okay.
Yeah.
Jim was just saying how sorry he felt for you that you lost all your money in gold, silver, and platinum today. But he said he was just joking.
It's all right. He's not sure. He's not sure. Who was saying that? Mike or Bill?
No, Jim. He's got a sense of humor that's about as warped as mine.
Well, we've been short since yesterday, so right now we're ringing the bell.
Like this?
Oh, look, yeah, and that's my eardrum just went. But anyway,
sorry.
Mike called it pretty well yesterday too. He got along the duck overnight or yesterday afternoon.
Mike B's a partner. We're going to have to get him tonight in the workshop. We're going to have to get him to talk a little bit about that. If you're out there listening, Mike B, get ready.
No, he's good. He's good. He trades, not every day kind of thing, but he catches some good trades, and that's, look, if you can pick and choose and pick the winners, that's a good way to be. But I think he got into the J Dust around 66 or so last night. It's been up to 71, so that wasn't a bad trade for a day. And right now it's a little bit above 69. He was saying he thought the gold might come down to 45, and I'm inclined to agree with him, given the way we just can't get any traction right now. However, I still maintain from what I was saying yesterday is that when we turn, look, we're under the influence of possible manipulation, and we're under the influence of the Fed kind of sticking it to us, raising the rates. Look, the last time they raised rates, gold went up. So how do you explain why gold went down yesterday? It's just you can't make it.
Its first spike was actually to the upside, but then it collapsed on itself.
Well, exactly. But I mean, the previous time,
mm-hmm.
the gold really went for a went for a big run higher. So and as I was trying to explain, look, when they raised rates a second time, okay, gold dropped $40 in one day, and that was the bottom. It was December 15th, and we bottomed at 11.24 actually, 11.24 I think it was. We bottomed, and we've been going up ever since, right? And maybe we rallied up to 12.98 into the Fed hike or whatever, anticipating the Fed hike,
mm-hmm.
and we sort of dropped down since. But in a way, realistically, look, we sort of went up $20 yesterday and then gave it back. But if you measure where we are today versus where we are, 2 days ago, we're only down about $7. So looking at it from that, you could argue that a Fed hike in December dropped us down $40 and made the bottom. If this one drops us down $20 and makes the bottom at 45, or won't even be that much, it'd be about $15, then to me that's bullish, because it means that the immediate impact of the Fed hike, dampening the gold, if you like, has been relatively, not too strong, not too heavy, and relatively short-lived. And what it also tells me is if we start going back up, then you've got I think it's easier to be long the next leg of gold that's going to unfold, because you've got a powerful fundamental reason now for gold to be going higher, because the more the Fed raises rates, the higher gold is going to go. And
they say that the word is they're going to raise one more time this year, right?
That's right, and but they may not. They may raise several times more.
They could. Yeah.
By the fall, I'm inclined to think we're going to be in some sort of a raging inflationary kind of environment, because what people don't realize is, look, if you've increased the national wealth by $4 trillion, which Trump has effectively done. By the way, that's more than $3.5 trillion in market alone, and the rest of it is in actual housing value gains. So it's actually more than $4 trillion altogether, total gains. The total national net worth has increased by more than $4 trillion since the election. That is like the biggest stimulus of all time. There's never been anything like it. It's a staggering amount of money, and it is very real. And look, you only have to look at the statistics this morning. Look at the Empire Manufacturing. Holy mackerel, it's about 18 or 19. I've never seen that number that high before. That is a huge deal. And there's some other indicators. And look at the unemployment claims down 8,000 today to new. I think we are actually cracking all-time lows on unemployment claims right now. That is a pretty big deal.
With all the retiring baby boomers and all the part-time jobs and just so many factors that have not been present before, I think the method by which they count that, I think they're going to have to change the formula to adapt to the current. I mean, this is not the 1950s. It's not the 1970s.
Yeah, I know.
It's not the 1990s.
I doubt if they're going to change it, because the point is, it is when it starts going the wrong way, it's going to be going the wrong way for the right reasons, and but right now it is what it is, and look, if unemployment goes below 4%, that will be enormous. That will be the biggest drop since the 50s. Since the 50s, the all-time record low unemployment rate was about 1952, 1953.
It's amazing. I mean, it borders on unbelievable. It really does.
Right. Well, look, the thing is, Trump is on the right track. He's certainly increased the net worth. He's an absolute all-time winner in that category.
The
by
Philly
far,
Fed rocked it too. It came in at 27.6. They were looking for 24.
Right. Now, sorry, which one was that?
The Philly Fed.
Oh, Philly Fed. Yeah, no, absolutely. That's what I'm saying. These two reports this morning are a blowout.
Empire State and the Philly Fed. Yeah.
Right. On top of that, look, if this, you've heard my mantra all along. Trump has to keep his foot on the accelerator, because if this rally, if this uptrend or if this expansion, reverses and goes into a contraction, it's going to have dire consequences. It would be highly inflationary and trying to get out of it. And so they've got to keep this thing going, and it has the potential to become the longest expansion ever.
Yeah.
Because if they can skirt a recession, we in a way the last 8 years of growth have been so slow. In a way, there's no need for a recession, because we haven't kind of overshot on a lot of upside indicators. So if we can skirt a recession and actually accelerate higher going into the 2020, which it appears all the ducks are lined up to happen, it could be like the 50s all over again, because the baby boomers, the 50s, for a long time, we had a lot of nonchalant, not nonchalant, harking back to the 50s as being the best times in America, when everybody had money in their pocket, and it was a
Those
great
were the
time
good old days. Yeah.
Back to the future type of thing.
Mm-hmm.
So and why was that? Well, unemployment rate was 2.5%. Everybody could get a job if they wanted a job, and if that's the goal of Trump, which is the stated goal, is that he wants anybody to be able to get a job, and we're getting towards that now. From what you were saying the other day about this guy can't hire the right people.
Right.
At least you can get a job. So that is getting better and better. And don't forget, when I finish this report, hopefully this weekend, it's going to have some eye-opening charts in there. There's one incredible chart that shows the growth in money stimulus since the 50s, and it's actually accelerating higher right now. So it's not just, the Fed are actually, in a way, slowing down this boom, but but actually by raising the rates as slowly as they are, they're potentially accelerating it, because what raising rates does is it means that people have got to get off their backsides. I mean, right now, mortgage rates are the lowest since the 50s, okay? So
most people in Arizona right now pay more per month for their health insurance than they do for their mortgage.
Well, there you go. And the point is that this, when people realize if mortgage rates are going to start going up, that's actually going to be a real driver for house prices, and it's going to stimulate people to go in and get loans.
We get building permits tomorrow morning at 8:30. The NAHB housing number missed today, and tomorrow we get building permits. That's a high impact. And if you're trading on Globex tonight, guys, they haven't given a time, which is somewhat unusual, but the Bank of Japan's coming out with their interest rate decision probably around 8 p.m. Eastern.
By the way, we might be just seeing a little bit of a uptick developing in the nugget here and the JNUG. The interesting thing is, even though the gold is lower today, quite a bit lower, the J dust and the dust have not made new highs to any degree, and they're actually off their highs right now, and they're starting. I'm getting kind of a bit of a sell signal on them, just for the record, right here.
Question from the audience, John, and it's a question David's brought up before. It's valid. If unemployment is so low, as they tell us, why are more people on welfare than ever before? Let's see, what is it? 50 million Americans, I think, are on SNAP, if I got the number right. Now, David said from the audience, the number from the government seems meaningless. 300,000 baby boomers retire every month, yet we never see 300,000 jobs created in a month. We always lose jobs every month. Malls are closing, entire chains are closing. So I think he has a very valid concern there. How do you reconcile that?
Well, that's the hard part. You can glean a certain amount from the current statistics, but they don't tell the full story. They're kind of ignoring, sweeping those numbers under the. I mean, look, by some measures, you could argue that 94 million people are unemployed in the U.S., and they probably are. But a lot of those people are retired, or and they may be on military pensions and stuff like that. So, it's just. I mean, it's always been like that. Even in the best of times before, you've always had a huge number of people who aren't working for one reason or another.
Yeah.
Right. And that's so.
Some people don't want to work. There is that element,
right.
But it's a small element, I think, of society. So.
Right. And there's your welfare. If people, I mean, there's always there's people who, if they can get something for free, they don't want to work. I mean, a lot of people in Australia, where in some of these other welfare, and in Europe, this part of the reason why the European community is going bust is because the welfare system over there is just unbelievable. I mean,
what do they call it? On the dole? Is that
exactly. And I mean, over in England, there's outrage. Half of this business of Brexit is that people are sick and tired of hearing about Polish people coming to Britain, getting free housing and getting benefits. Getting hundreds of thousands of pounds in benefits and building houses and stuff and getting rich off the government. I mean, it's an outrage, and a lot of people have found loopholes to do that, to exploit the system. And some of these other European, I mean, look, you've got Finland talking about, they're the closest to actually making reality of actually paying every citizen $1,000 or a couple of $1,000s a month, just to
they're getting ready to pull the trigger on that thing. That's always been something that's been, bandied about by academics. Would it work? Well, I guess we're going to find out.
Yeah. As far as the markets are concerned, we got pretty lucky with the markets yesterday and today. I had if you remember, I think before, as the Fed was announcing, kind of had a bad feeling about the markets yesterday, the way they were acting. They were starting to roll over and look like they were going to sell off.
Well, on gold last night, when we sent out our alert to the clients, we said to consider selling 1263 on gold, and we dropped $1,000 per contract.
Yeah, I know, it was a great trade.
That's a gee whiz.
Trade. Yeah, and also you probably did pretty well out of the stock market too.
Yeah, we had a couple of good trades in the S&P that were available. We had recommended getting short 24.23, and so the first move down took us to 24.16.5, call it 24.17. So that's a 6-point drop. Then we got back above the trigger, and we dropped again for another 6 points. And then we got back above the trigger, hit the weekly trading zone at 28.29, and then it looked like we were going to trigger again, but this 30-minute candle is printing green so far. So
yeah, well, look, the market is actually the fangs have gone a little bit on the bullish side. They're starting to come back. Amazon, Apple, Google, etc. Facebook, they're all kind of, they gave a pretty strong buy signal this morning. Nvidia also, we got long right back around 147.5 this morning. We're 152.50 right now, and it feels to me like the market's going to come back. Okay, it had a bit of a shock because of this nonsense with the Washington Post talking about Trump being investigated. That knocked the market
they're
down
talking
last night.
criminal investigation.
Oh, it's a disgrace. especially with what happened yesterday. You know, I mean, to come out with that after what happened yesterday is just
What
beyond the
particular
pale.
thing are you referring about yesterday?
No, but I mean the shooting. You know, the shooting thing.
Oh, yeah. Yeah, that was bad.
So,
Well, there was two shootings. There
and,
was one at the baseball game, and then there was another one in California somewhere.
in San Francisco.
San Francisco.
That was a UPS. It was one of these.
That was a disgruntled employee thing.
Yeah.
Oh,
But I think it involves some Somalis or something.
Oh.
So, but they kind of muffled it because it's coming out of California, you know.
Yeah.
So, but we've actually got. Look, the LABU has come back to 51. We actually put a buyout of 51 earlier, a short while back, and it's starting to get traction. It feels to me like we might actually cut the losses as we go into the afternoon now, given the way the market's sort of probing the highs of the day. And I think if that happens, we might be sort of back on track by next week. And if that's the case, I mean, right now we're 21,350 on the Dow. As I said, there's only 650 points to 22,000, and you know what? We could still hit it by the end of the month if we get this. Because if we can recover from here and start hitting new highs in some of these stocks again, some of the FANGs and Nvidia and some of these other stocks, we could have a really, really strong rally going into July, and we could be potentially rallying right into July the 4th here from where we are right now. So I think this is actually quite a powerful developing buy signal here, as long as we don't roll over this afternoon. If we roll over, then I think it's obviously going to extend this correction somewhat. But
let me open Ed's mic so he can say hi to you.
Okay.
Hey, Ed, you got a live mic.
Can you hear me?
I'm here, buddy. Yeah, okay. I can hear you. You sound good.
Okay.
I want you to get in, give you a chance to say hi to John.
Yeah. I was listening.
Hello, Ed.
Hey, how are you?
Well, you know what? I've had a very fortunate run in the oil sector in the last couple of weeks. I never picked it better. Just a couple of times when it was looking bullish, I just went for the long side, and then we sold it on the rally and reversed and profited from these incredibly sharp drops that we've had since, right down to this morning's lows. And you know, knowing that natural gas has a tendency to go the other way, we had buy stops on the natural gas just above this morning's lows, and there was a huge run-up, a huge spike higher on the news of the inventory decline this morning. So, you know, can't complain really with the way the oil sector is right now.
The oil gives you plenty of opportunities. Sometimes you have to change your hat pretty quick, right?
Well, no, we did exactly. That's the secret. That's the secret.
Yeah,
you know,
it is.
Look, if you can get in sync with it, it's great. And sometimes if you're out of sync, you can get hurt. But if you get in sync with it, it's great. And fortunately, we've been in sync here for the last couple of weeks. But it feels to me like we're getting down towards a level where maybe we're going to, you know, if the inventories come in lower in the next few weeks or months, maybe we'll get another uptrend in the oil. But that, I think, the inventories have to come in lower for that to happen. Would you agree?
I agree. It needs to happen pretty quick. I'm going to show you what I wrote up here when I get my stuff up. But yeah, I think the bulls have to assert themselves really this week, next week at the outside, or they're going to lose. They're going to go to another level. And I think they've had opportunities to do that.
Hey, I just shot you the charts.
Okay. So, let's see.
Okay, I can see your desktop.
Oh, okay. It's not what I'm trying to show off there. Let's see.
Okay, we got your charts now. Go ahead.
Yeah, on the oil market, I'm seeing some really different patterns they're very uncommon in Elliott wave, particularly on a daily or longer frame. But if you look at this daily chart, we have an ABC down here, followed by a 5-wave move up, followed by an ABC down to new lows below the reaction low, followed by a 5-wave move up that fails to take out the top of this, and here we are in another leg down. And the thing is, the counter trend waves are ABCs, but what we see here is the ABCs, we're in a downtrend because, we keep making lower highs, right? So consecutive lower highs, lower lows, downtrend, but having an ABC down and a 5-wave move up and an ABC down and another 5-wave move up, and now we're at the point of making a 5-wave move down, and I believe we may well do it. And that will change the tune here. So that would make it more explosive to the downside if these levels break. And this is 43.76. I think we hit 44.32 today. This is just a really strange pattern. I rarely see it.
Let me throw
because it's really against the rules of Elliott. Okay, it should be 5 down, 3 up. Pardon me?
Look, it's got a very heavy month, first of all, and we're halfway through the month. So unless we look, either we rally, we remember the last bottom in May was a kind of a spike bottom here. As I recall, that a hard bottom. This is a kind of a soft bottom. If maybe either we could go down to 42, or just slightly take out that spike, or we could, if it was really bullish, if we actually went up from here directly without threatening that spike, and reverse this up in the next few days and going into the end of the week, you could potentially have a monthly reversal that could actually turn positive. So
and that would fit. That would actually fit. Here's when I go ahead and break this thing down a little bit further from the daily. I can call this a 5-wave move. We're in 5 down on this breakdown here, and when I break that down, I'm in 5 down on that. So these are the kind of things that make bottoms. You start to find the multiple fifths of the fifths of the fifth when you go to successively smaller time frames. And here's the smallest time frame here, the 49-minute chart. We're in a 3rd wave down here. So the key is, when we come up, we'll look for a bounce in here. It's probably going to fail somewhere between 45 and 45, the 382 up here, 45.24. If this rally could get over this level, 45.71, it would really tilt the odds in favor of the lows being in that we're probably not going to break this critical 43.76 low here. So that's what it's all about, not breaking and not decisively breaking or closing under that level, because there's no support till we get to the $40.50 level.
Let me ask you a question, Ed. On this past Sunday night, I put out 2 swing trades on Twitter. It's twitter.com/CFRN, same it's been for years for anybody that wants to have a look at it. We said to consider selling crude at 46.50. We put our stop loss at 46.90. The target is 43.40. So from where we sit right now, do you think we can see 43.40?
Well, yeah, we can. But I think to really determine that it's not good that it's just parked on the lows here.
Well, I'm just wondering if I should tell people to consider taking profits.
Well, if you have one contract, that would be the hard one. If you had 2 contracts, I would take 50% of my position off. In these levels, or certainly if it got above this 382 back up. Yeah. I wouldn't let it. I'd take some money off the table, because you're in business to make money, right? If you have one contract, it makes it a lot harder. If you got multiple contracts, like if you had 10, I'd tell you take 3 off right now at the market. Don't mess with it. And
now, I can't see my chart because your chart's up. What is the current price right now?
It is 44.54.
So basically, it's a $2,000 trade so far with a $400 risk. So that worked out nice. You know what, guys? Any of you that are in that swing trade, especially if you're on one contract, you might really consider taking your profits here. Okay.
Yeah, and if you have a hard time doing that with one contract, then ask yourself this question: how many times do I make $2,000 a contract in this kind of time frame?
If it goes to the target, it'll be $3,000. But if it goes,
and it may well do that, Dwayne.
But if it
I'm
goes
just
back
saying,
to the entry,
it's easier
it'll be zero.
to have more contracts. It's easy to take profits.
And we had a swing trade
all of it.
on the S&P as well. That ran up 10 points. It did not hit the target. And anyone that did not get out or take some profits, they ended up getting stopped out. The stop on the S&P trade was long at 24.33. Target was 57. The stop loss was 25. So we ran up and hit 43. So 10 points in the S&P is always, that's a nice trade, but it's still way off the target that we had put out, 24.57.
Right.
So
right.
But
of course, the person who has multiple contracts has a lot of options here.
Yeah, both trades only have $400 of risk, so.
Yeah.
Okay.
Yeah. Well, what my question to you, Dwayne, what would you tell them if the market reversed and started going back? At what point would you take off the position?
You talking about this crude position?
Yeah, a risk trailing top type of thing.
I'm recommending right now that they just take their profits.
Yeah, it's such a good trade. Yeah, you got to really make sure you get some of the good trades. And that's up to you when you got them.
In fact, when I put out the trade originally, I said consider selling crude at 44.90, same target with a stop loss at 45.30. But then I came back and I said, looks like we're going to rally up to 46.50, which we did. Consider selling there with the same target and a stop loss of 46.90. So if you got stopped out on the S&P, you have $400 of risk. You more than made up for that if you rode the crude trade down to this point. So,
well, it's a great trade. You always want to make sure you make money on a great trade.
Yes.
Okay, and that's up to you and you alone. But you can make. This is how you get the edge. That when you are fortunate enough to make a good chunk of money in a hurry, how much of it are you going to take? It's not a matter of should you take it. How much should you take?
Yeah. And
you're one of the best traders I ever advised. In fact, he was really the best trader I've ever been around in my life. And I advised him for 15 years, and I know him well. And he always told me, he said, I'd give him a recommendation. He'd get in. And if we were lucky enough to make a lot of money in a day or two, I'd call him and say, I think it's got another day or two to extend. I wouldn't get out of it yet. Mm-hmm. And he said, it's a great trade. He said, thank you for it. But he said, right now at this point, I don't care what you say. He said, I know how much money I can usually get out of the market over a 2 or 3 day period. And this is about the max. Mm-hmm. So he said, I'm taking it all off. And, it was a big trade. He had 500 crude contracts in there.
Wow.
But he took it all off. He wouldn't even do a partial. It was when I was first starting to learn to work with him. But he said, that's my rule. He said, that's why I've never lost money in 25 years.
John, are you still there?
Yeah, I am. Yeah.
You think crude's got another $1 to drop in it?
Given the way it is, you'd have to. It's a higher probability of that happening than a reversal to upside. The only way crude's going to go higher is if the Saudis come out something positive, or they cut some more or something. There's some kind of a surprise development.
Are there any meetings scheduled over the weekend?
Any what?
Any of the Saudis? Do they have any kind of meetings or get-togethers planned?
I don't think so. But look, the crude inventory actually came in slightly down, and the market sold off. So it's
right.
We're just looking for an excuse to sell off. So
the market has heavy hands on it right now, and I think
unless we get a drastically lower inventory like 5 million barrels or something, I don't think we're going to reverse up. Just it kind of really looks like it's going to go lower. Right
Well,
now.
I think it comes down to this decision point here on what we do on these lows, because that is real clear. This is what I wrote up Friday. About I do WTI and Brent together because the guys at Trade Oil want them both.
This was written last Friday?
Last Friday. Well, last Saturday I wrote it. The bulls need to reassert control by the end of this week. This is for the week we're in. And prices need to hold last week's lows on a closing basis, which they didn't do, to avoid tests of critical support at 43.76. I'm just going to give you the WTI numbers. That's a critical number because it can't allow much follow through under it without flushing another few dollars. And when it comes down to it, here's the deal. That's where the bulls have to draw the line in this thing if they think they're going to have a chance to turn around. Because if they do not, this 43.76, it wasn't down there long. It wasn't under this 44.08, which is 382 retracement back to the 26.05 low that we made early last year. That's a big move. That's a big number. It's not unrecognized. It's why it came back up from there and mounted a pretty stiff rally.
Yeah.
Up to $52. Okay, so we came up over here at almost $9. Now, we're right back down on it again. So this is going to be a decision point right here. And I think it's either going to break. If it breaks at the next real support level is at $40.64. And I mean if it decisively breaks it, let's say by 50 cents, or if it closes under it by more than 10 cents, I would say then that's the next number in play. So we're playing with a point here that's real critical, I think, to the market. It's critical on the wave count, in that what I was showing you was on the shorter term wave counts, we got room for it to bounce and then come back down again. If we can get more of a bounce on the shorter term chart, that I was telling you, this would be my point. 45.71 tilts the odds that we're not going to break the 43.76. But if we break 43.76, we may not follow through. We won't know till we see. I don't think anybody really knows. But the market, like John said, feels heavy. There's some people in here that really want to break this market down. They really want to break it down.
Well, our lowest zone for the week is 43.30/35. So we don't expect it to trade any lower than that. But that, I see that's not a number that number is kind of in the middle of your support number. Yeah. Well, no, actually, your support number is at 43.70. Okay, and I'm down at 30.35. All right.
Ed, by the way, I saw a very, very interesting chart about a week ago. I'll see if I can dig it out and send it to you. It shows the comparison of the last, major lows in crude over probably 20 years or so, and how or maybe even longer, and how the rig count unfolded off all of those bottoms. And this is the steepest increase in rig counts ever right now.
Yeah, I think people are really focused on that. And those guys, to really live, need $53 to $55 oil. That's what they're counting on. They can get by
what
with
we
that.
might get if we get if we break the 40s, get down to 39 or into the high 30s, that could be a secondary test of the extreme low that we had, a year and a bit ago. So that would be a year and a half ago now. So if that happens, and then maybe then some of these guys are going to go out of business again. Because look, there's a lot of oil companies out there that are still very much. Look, somebody asked me about OAS when it was $14 a share. I took a look at it, Oasis, and I said, this is a company that's in trouble. I said, I would get out of it right away on any kind of a downturn. This is when it spiked up to 14, because it just looked troubling to me. And take a look at it since. It's plunging to new lows probably today.
Yeah,
so
they're killing the energy stocks. They are doing that.
Yeah, this is and look, Devon Energy.
But that's a cash flow problem there, John. So it could really take a long time to come back.
Well, the thing is, look, whole bunch of companies went under. 80 or 100, a huge number of them went under. Even after the bottom happened a year and a half ago.
Mm-hmm.
And then they got a kind of a, when it got up above 50, it sort of gave them some breathing room. Now that's been sucked away from them, and so right now they're probably losing again. A lot of these producers.
Well, what's the cost of production on average?
Well, it depends on the field, and it depends on the company in the field. It's kind of when they bought. So the numbers are all
over the
different.
Chart.
Yeah, but $53 to $55, they'll keep drilling.
So everybody's profitable at that price. Okay.
Most of them can get by. Well, some $65 would be ideal. They'd be making a ton of money at $65. So you can say, well, that's a nice cap for the market for now, because they will increase their drilling. They do have the leases in place. There's plenty of places to drill right now. And, so the market knows that. The question is, where do you draw the line on the downside? The oil market's great at making spike lows. Really great. It gets real volatile around the lows, and it will spike down there, and we'll see the reversal. It's not going to sit down there. When it's at the really value point, it's not going to waste any time. It's going to stay there and give you days to think about it. Okay, it always seems to end in a spike low. And, the rig count thing is very sensitive price, like John said, and that's all they're looking at. That's all they're looking at if they got the cash to drill. Some of them don't right now. So, anyway, Dwayne, what I did on this thing,
Hang on one second, John. I think there was something you were trying to say there. What was it?
Well, what I was saying is that regarding the profitability, look, there's only one field. What's the name of that field? Permian Basin.
Permian Basin.
That's the one that's the most efficient, the cheapest.
Right.
But the other thing I wanted to ask you, Ed, is, look, one of the things with the shale is they have to. It's sort of like the running around the wheel. They have to keep boosting the production because the shale wells run hot for a few months and then they start petering off. And some of the shale wells they drilled a few years ago are probably running out of oil right now, or are likely to at some point in the not too distant future.
Right. They'll require them to rework them or just live with whatever they can get out of them.
Right.
Yeah, they do require.
And then there's there's Canada. There's the tar sands. They are so underwater, it's unbelievable. I mean, their production cost is about $90 to $110 a barrel. They're being subsidized by the government. Then you've got the offshore oil is in the 90s as well. Pemex is seriously underwater, being one of the big offshore producers. BP, the North Sea.
Yeah.
I mean, there's 120 platforms shutting down in the North Sea. And then you've got, then you've got the Saudi rates and the other places around the world where they're, the production is much more profitable. But I think one of the reasons why the rig count is going up so fast is because they have got a lot better. They've cut costs, they've got lean and mean, and so they've managed to bring their production costs down by $10 or $20 a barrel on a lot of these shale fields. And it's sort of the similar thing with the gold. Recently, GOLD and Royal Gold, which are kind of royalty companies, have been going up pretty strongly, so they're only 20% off their all-time highs. Mm-hmm. And when you consider that we're 40% off the all-time high in price, it tells you that the gold companies have gotten more lean and mean, and they're bringing their costs of production down to some extent, not drastically. But they've certainly gotten so that what I was saying a week or two ago is if we do break above 1,300 and go up to 1,350 or 1,400, these stocks are going to hit all-time highs because they're going to, every single dollar is profit, and it's the same with the oil. If
right.
the oil goes back up,
right.
They'll be, and I think they're betting on that. They're sort of saying, look, we can suffer some pain in a short-term downtrend. But if the if we start the next uptrend could be a dream run for the oil.
Well, if you think about it, you could also have something happen in the Middle East, which they've been able to avoid so far. But it's almost like they're really converging in on something's going to happen there. I think they're very close
look,
to it.
They don't, these guys know that if they stir up some trouble. I mean, look, it's great for Putin, it's great for Russia, it's great for the Middle East, it's great for everybody actually if the price of oil goes.
Well, the Saudis, I mean, all of the oil, Iran. I mean, if that's the only way they can, I mean, the deeper this thing dives, the more desperate they're going to become. And whether they have a extended supply outage or not is one thing or another, but just the announcement of something going on in the Middle East that's escalating, with the question mark of how bad is it going to get, will cause all the shorts to cover, and that'll be worth an easy $8 to $12 on crude in a hurry.
What everybody forgets is, I always look at North America as the producer rather than the U.S. On its own, because North America produces 19 million barrels a day, and combined, and we're way more than Saudi or Russia. And actually, when the price of oil is up, like when it was at $100, we were booming. The economy was booming because a lot of that revenue was circulating in North America.
Right.
And when the bottom dropped out of the oil market, take a look at the stock market. What happened? We had the big 14, 15, 16 correction, and we had pretty much of a slowdown and everything. So in a way, if we do get the price of oil back up, it gets those petrodollars circulating around the world and getting back into the economy in a very, very positive way.
And
that could be that could extend the recovery into the 20s, which is what we were talking about earlier on today. It's so important.
I think it will. I think it will ultimately happen. I think the biggest risk to the oil market from these levels is, aside from the next $5 down, it can do that. I don't think you're going to get a whole lot lower there, for many reasons, but particularly, it's going to hurt too many countries, and they'll find a way to get it back. When it starts to hurt our country, our companies over here, in a big way, they're even going to not do anything. Who knows what they're going to do? I mean, they can voluntarily cut back production, and they're going to cut back production if it gets below their cost to produce. They're going to minimize it. So how does the market get balanced? Well, it gets balanced by price. Price goes lower. It tends to put more pressure on the market to get balanced because you're pulling down supply at that point. And the lower it goes, the less supply you're going to have. And then they just don't snap their fingers and bring the wells back up, but they can get them up fairly quick. But you certainly stop all the progress that you're making, and it does have an effect on this. And if OPEC stays the course of what they said they're going to do, and so far they've been doing that, if they continue to do that, the market by itself with the current supply-demand situation is going to rebalance the market by the third quarter. I think sometime in the third quarter, we're going to be drawing down global inventories, and that will make a difference.
I totally agree with you. And you know what? That's something that nobody really sees coming right now. And
right.
And here's the interesting part of it. I think we're going to, unlike we've had a lot of weak fourth quarters in energy. I think this year is going to be different. In fact, we're going to have a strong fourth quarter in energy, and then I think we're going to end up as the first stages of the ice age hitting us next winter. I think next winter could be the coldest winter we've ever had in our lifetime. Because
have you followed the La Nina and El Nino, the sea surface temperatures? Because they've done some really strong correlations of heating oil usage and demand. Heating oil for demand in the North Americas is directly related to whether it swings into the La Nina swings into an El Nino, which means warmer subsea temperatures, which means more hurricanes. We've been in a La Nina for a few years, and we're coming out of it now. So that would drive down demand in the winter, but it would also for heating, but it would also increase demand for gasoline in the winter. So there's offsets to that, but I'm watching that closely since, I live on the Gulf Coast myself. So we're always interested in whether we're going to get slammed or not by the hurricanes.
I think that I just got a feeling, this guy from Cambridge, he's the real Ice Age, authority, and he's come up with some very compelling evidence. And the last time this happened was in the 1600s, and the Thames in London used to freeze over. And it may be, and look, it's kind of like Lake Michigan and the Great Lakes. They don't always freeze over every year, but in the last few years, they've been freezing over like never before. And the Hudson and all around New York.
And they stay frozen for a long time, too.
Right. Yeah. And imagine, I think the day, if the Thames freezes over, Trump is totally vindicated. that's my, it's sort of like hell freezes over. Well, if Thames freezes over, that's good enough for me.
The media will never vindicate.
You know we're in an ice age when that happens.
Yeah. Well, I remember how it was in the 80s. When they were scaring us all that we weren't going to have enough fuel to keep us warm. It was going to get so cold. But that's crazy. Yeah, but I think here you got to be practical about it, about what's going to happen here. And to me, it's real simple. The market technically could break down to $40, and I think it's got problems going under 40 for very long. I've got a yearly predicted annual low that I generated on December 31st of 2016 of $39.90 something. $39, and I didn't even put it out to anybody because I didn't believe it could get there. Here I am thinking, well, if it does get down there, it's not going to stay under there very long. The only thing I think that could do it fundamentally would be a global financial crisis that was lasting, which can always occur. We certainly have many metrics that tell us that could happen on an unannounced basis for sure, but it hasn't happened, and that could have happened back in 2008 too, and we're another 9 years later, and we're still chugging along, and the Fed still feels like they're the Wizard of Oz at the switch, and everybody's pretending everything's okay, and it is, as long as it's okay. But to me, I think that's what it would take to make oil stay under $40. It's going to take something a lot more painful to the economies of the world to happen. It could happen with a war. It could happen with, a financial catastrophe. But I think, there are things that could tilt the apple cart for sure. But betting on those things happening hasn't made me any money. I learned that early on. Because I thought some things were so macroeconomically sensitive that it was going to happen, and it didn't. So, I'm really kind of a skeptic right now that's going to occur, but I'm very willing to admit it could occur. There's enough things in the works that it could happen. But as far as trading goes, we have to look at what the price is telling us to do, and that's why I love the technicals, and I always have to default to them. I think, if we get down to $40 in here, I'm of the opinion that I don't know. I think I'll be able to tell when we test that 43.76, we start to rally enough out of here to confirm to me we're not going to get within reach of it. So that's kind of where I'm at. When I break these charts down, though, they don't show me the lows in yet. So, and especially when you see it going sideways here. Dwayne, I had a thing I wrote up over the weekend that I told people that I might buy the breakout at 46.21 in here on this, where you were selling it on that up move.
Oh, really?
And I was just scalping the dumb thing, but I did get in, and it broke out over like two something in the morning. I just put the put the order in the market and went to bed and
Mm-hmm.
had an OCO to get me out. And I was just looking for, 40 points, 40 ticks in it. So, I got my money and got out. While I was
Well,
asleep,
initially
I woke up and the trade was over with, and the market was back.
That was before the news came out yesterday, right?
That was on Monday when that occurred. Here's what I said. Yeah,
right.
I may buy a breakout over
rallies
40.
Monday. They had two rallies Monday and Tuesday, right? Both nights, right?
Yeah.
Right, I remember.
And I said use a tight trailing risk stop. So
you know what might be? It might be wise to put some buy stops in just above the, the crude or above the last half day's highs or something, just to, in case something came out, you'd catch a move, like just same as natural gas. That's what we did this morning on the gas. Actually, since yesterday, we've been moving the buy stops down on the natural gas, and caught this move up this morning, and it's actually breaking out now. It kind of seems like it wants to go higher.
Yeah,
the other move that's going really well today for us is the grains. We got back in on this dip this morning, right? Actually, 927 was our buy on the beans this morning, and we're 938 right now. And we caught the spike down in all of the beans, and I think this could be the beginning of the real move in the beans now. I know we've had a few false starts, but this feels like it's the real deal this time. And that might help the gold. That may, if we get a spike down on the gold, possibly down to the 45, then with the fundamentals of the grains moving up, and actually some of the orange juices turn very bullish as well. Probably a good idea to be long orange juice that has a habit of rallying strongly in the summer. And coffee, I would definitely want to be long on any kind of move up above 127.5 or so on the coffee, because there's a Brazilian frost season is coming up, and it's a long time since we got caught in a frost down in the South America. But if we do, the last big time that happened, coffee went from like 130 to somewhere like $3 or $4 a pound. I mean, it was just unbelievable how much it went up. It was a massive. It went limit up for days and days and days. And if you catch one of those moves, then you're, So look, it may not happen, but it's always best to be prepared. And it can sometimes come out of we're getting down into an area where there's not a whole lot of risk in buying coffee when it gets down to these sort of levels.
Yeah, the hedge funds have people on the ground in Brazil. They have their own detective network down there to keep an eye on everything, to try and get the up on everybody. Yeah, it's cheap money for them to spend when you look at what they're throwing around. On nat gas, let me just jump in since you brought it up. I was looking for nat gas to test lower levels for wave 5 down on the 350-minute chart. As long as price stay below 325, prices hold the key 286 support level, and wave 5 down, expect a tradable rally. Place support in the 286 293 area with resistance at 309 to 318. Critical support in that gas at 250. Now keep that in mind, because I wanna go right here to it right now, because here's nat gas. Nat gas put in a major low at $1.61 back here in the early 2016. Okay, we put it in right. It was $1.61. It rallied up to $3.90 some cents, $3.99.40 from 161. Now, that was a major bottom here. Major bottom into 5 wave down. We had it when it came back up above here because we had it 5 of 5 of 5 on several chart time frames. So, once it moved back over to 250, it was in the bag. But I had other reasons to buy it down here, and we didn't hold the positions. But on this, I'm looking. It's showing a 3-wave move up. In reality, it was a 5-wave move on the daily chart. And because of that, I'm looking to find the place where this thing's going to bottom here. It came down early, and it held the 252.20 level, which is the exact 618 retracement back down of this third wave. So it held there. It held at 252.20, and then it rallied up to 343.10, which was the exact 618 retracement to the 10th of a penny back up to here. And so we failed up there. That was a critical point up there. We got the failure, and we've now come down to 291.60, which we hit this week off of the 343. So what I'm interested in here is I'm real interested in buying this because this is a long-term low. The bigger the pullback, the better the buy it's going to be, and I just have to figure out the safe way for me to get into it. And this is the count that I was touting over the weekend. I use a 350-minute chart, but each day you have to add time frame to the Elliott wave to make it, and this is that same count. We were looking for the fifth wave down. We got it. And we got down here to 291.60, and with this kind of rally, it looks like that was it, John. I think we've probably seen it here. And let me get this on schedule here. This is like why is it doing that? Oh, it's just that I can't see it. Okay, this is really good. It looks like it put the lows in, and we did have a pretty good. They were expecting, I think, a build of 88, and they got a build of 78 billion. So they used that as an excuse to bottom the market, but it was in its fifth down. So now, I'll be looking to buy the pullback. The first pullback I'm going to buy is when this thing comes and retraces this leg down. This comes down to the zero line. I'll be interested in buying this nat gas. So I'm with you. If you think it bottomed, John, I certainly do too. I think it did it today, and I'm real interested because I know what nat gas is like, and it's pretty sloppy right now in the physical market, but it can clean up much easier than any liquid market. Okay, it cleans up quick, so it can clean up. It's probably not likely to unless we get some real big air conditioning demand until we get into the fall, and then we'll start to see it kick in when they fill up their storage caverns for the winter. And they'll buy ahead of winter. But, this thing got plenty of upside. That's a major low. So, I'm thinking longer term here, but I like it. I like the market. On the S&P, let me come over here on the monthly chart on the S&P. This is the dominant wave count here. We started from 665 down here on the March 09 low. We're in the fifth wave up of wave 3 up. It's interesting because this is, I'm real interested in this, that this sequence, once it's completed, I think we could have a retracement that would cover the retracements back down to where wave 3 began, because we'd be retracing wave 3 for wave 4. So if we just stick the numbers in here, they're pretty convincing. Let me get this attached here. I want to see what we got. All right, give me the 4575. Okay, it's going to be close. But just even a 236 retracement of this move is down here at where it's at 2095. Would that bother anybody? That would be a minimum retracement. And so in the most bullish cases, that'd be all the correction we would get. Once we get the top in, that's still several hundred points. The 382 is down here at 1902. So playing big picture here, this thing, are we interested in this thing putting in the top? Yes. I'm watching it. Have I been expecting the top? I have to tell you, no, because I was expecting it on this fifth wave so many times. The fifth wave extended on this way up that it just erased this third wave, because what we thought was the fifth wave became the longest wave and had to be relabeled as a 3. So I kept going 3, 4, back to 3 because it went too high, 4, back to 3 because it went too high. This time it hasn't gone too high yet. So, very guarded here because I'm really bullish on the market. Okay, I've been really bullish on the stock market for years. But I am now, I have to say, and I'll read this to you because I wrote it up last weekend. The S&P, the NASDAQ, and the Dow Jones all posted new record highs last Friday before the tech stocks took the lead to the downside for the first time in a while. All three daily counts have potentially completed a daily wave 5 up, although confirmations will certainly require more downside performance, even though prices did reach into our 50-point target cluster for wave 5 up. I had several wave counts pointing to that, along with my projections that I made at the beginning of last year. Important support points to watch are, and these still are valid, 2360 on the S&P, 5987 on the NASDAQ, and 20,700 in the Dow. Those I would consider very important that the market holds. While a break of these checkpoints would not mean the uptrend is in trouble, they would likely favor a more extended correction if broken on a closing basis. Now, what that means is that more extensive correction could get us to levels that would turn the thing into a downtrend. And see, we will go into some type of downtrend in wave 4 down on that monthly chart because there's a lot of ground we have to cover once we do it. The question is, the way the market's skittish, I'm impressed with the way it fails to panic. It just fails to panic. They had an opportunity to break it down, and there's someone that always comes in and buys it, whether it's the plunge protection team or not. I don't know how they're operating right now under the administration, but I'm sure they're there. They're certainly guarding it around the Federal Open Market Committee meetings. They're really intent on always turning gold down after the meeting and holding the stock market up. So I know they spent some money supporting the stock market here this week. I believe that. So while the uptrend, as strong as it has been, is prudent to measure our steps, especially with the next FOMC meeting scheduled for Tuesday and Wednesday, and some of the major legislation starting to take place in Congress. The annual S&P Dow Jones pre-calculated highs, calculated on 12/31, are at 2493 in the S&P and 22,143 in the Dow. Those were the projections at the beginning of last year, respectively. With the market decidedly bullish the first half of the year, which it has been, because it hasn't given us any kind of normal corrections that we would see on the way up. These targets should easily be exceeded by year end if we do not see more than a 300-point S&P correction by mid-October. So I'm laying out my game plan here. I'm telling you what I'm looking for. I want to know what the points are so that I don't need to make a decision in the middle of it all. So this is what makes logical sense to me now. If it corrects more than that, they're going to have to fight harder to get it back to those projected highs for the year. But it's exceeded the projections on the shorter time frames. So without that correction, there's no reason not to expect that those numbers will be taken out by the end of the year, and it could be significant. It could be. So then that's pretty much what I said there, on this thing. And with the warning not to take one of my signals that I put out on the upper part of the page until after the FOMC meeting results were done. And I'm going to get to gold, and then I'm going to run here, guys.
Okay.
Gold prices ran up to a 6-month high at the lower end of the daily wave 5 target range prior to turning lower for most of last week. Price should correct lower, and we'll be watching for the behavior around the 1248 to 1257 support range this week. Well, we're in there today. That's where we got to. I think we did get to 52 or something, 1252. 1248 is a 618, so I'm interested in that level. And basically, this would be the place I'd like to see the market hold. I'm not sure it will. I'll now patiently wait to look for buy setups on a deeper correction for further out call purchases, provided 1190 level continues to hold, which I expect it to do. So let me get back to this here, Dwayne. I'll jump to gold. So here's a gold market on a daily basis. on a monthly basis is still extremely in strong hands. You definitely want to be long on a break over this reaction high that it had at, where was it high? 1377. So anything over 1380, you may want to be sure you got a little bit of this stuff in your pocket, because what it would likely be would be entering a third wave up of the wave 5 up, with projections up over $2,000 to begin with. The second projection is like 2750, and if that gets taken out, each time Elliott wave takes out a projection, it projects another higher number. So those will just keep going as long as it runs. And we think it's wave 5 up. It could turn into a third wave up. It's that kind of market that could do that. And then before you know it, you're 4,000 or 5,000. That could happen. It just, am I going to bet the exact time when it's going to happen? No. But I know this. I know that's a put up or shut up number. That getting above this reaction high here is really, really critical right here. And so you start to break over 1377. You better be thinking about what you're going to do if you're not in before then, because I think that could, if that goes into the third waves they're a sight to behold, because that's when everybody panics. Whether it's a third wave up or a third wave down, that's when the extended move occurs. And it's at the height of chaos, panic, and emotional trading, where people have to reverse their positions. These guys are okay, because the shorts still didn't come out here. Some of them did. They said, we got the market turned lower, so we're okay. And they'll know they're okay until that goes. And then the other guys will come in here and say, whoa, this is a wave 5 coming back up. And we just took out the top of wave 1. And this is going to be a third wave. And it could be a really powerful move. I'm just saying, I look at this stuff for the sole reason that when these things happen, I can just execute. I don't want to find any, counter-intuitive ways to talk myself out of a trade that I know just strictly on the technical basis I have to take it. So that's and I'm watching this go the 500-minute chart. This is wave 4 pullback. It looks to me like it could bottom right in here. The 1248 level down here is a 618. I'll be watching that on a closing basis. It seems to be having a hard time lifting off this still. So as we go in, I only need, from an Elliott standpoint, one more low. And right now it's projecting that low down here. The first low is around 1250 and the second one's like 1245. 1248 to 618. So I think that's the money place. I'll be watching that. I'll be willing to take short-term buy signals down in there if things are clean. And I won't know that till they're there. But I know that's the potential point. So I think that's it, Dwayne. I was going to show you one other thing, but we don't have time for it. I wanted to show you where's that baby at? It disappeared on me. Huh. Yeah. We don't have time for it. Sorry.
All right, buddy.
But I was going to show you a little run on checking entry signals and trying to determine whether they're going to be good or not. And I'll save that for another day. How do you test that?
Well, yeah, well, that's a great topic. We'll cover it next time you're back with us.
Okay.
Well,
you got any questions?
Yeah, let me see. I need to punch up the chat box there. There might be. Yeah, Richard had a question. Well, let's see.
It was Richard. I'm going to the S.
Yeah, Ed have June 16th, 21st, and 23rd of June as potentially very important top for the S&P, plus or minus a day. outlier day, July 5th. This will end the wave 3 high and bring on the bigger wave 4, which after completion will bring in wave 5, ending the bull market from 2009 low. This wave 4 could be a 100% plus, could be a 10% plus correction. Your thoughts on this?
My thoughts are it'll be 10% as a minimum. Yeah, I agree with them.
Okay.
When we get it. Now, I think there's some things in order here that we are close, and we're close until we're not close, right? The market can go up and prove it wrong. But there's a lot of things that have lined up that haven't been lined up in quite a while that say, this could be, this could be it. This could be the fifth of the third wave up. And that's what I'm looking at here. So we'll have to see. And what Rich is looking for, the timing standpoint, I'll default to him on that because he's got more in his bag than I do on the timing. I'm more of a numbers guy, so I try and make my decisions around the numbers. And it's just the way I grew up trading, So I think that 10% certainly in the ballpark, And I think if it could fall, say, a little more than that, like 14, 15%, then it becomes a challenge for them to get back to the highs, more of a challenge for them to get back to the highs. But do I think they could do it by the end of the year? Absolutely, especially if they puke it down. So all I know is they keep supporting this market every time it could break down in here. They're trying to hold the market here. They don't want this level to break. And on that September contract is 24.12. They got, I think, 24.16 here. They got it to 24.16 here. They got it to 24.16 here. So you can see the battle line's been drawn here. They're trying not to let it go below that. The problem they got is that's below the 80% point where they're holding it. So they really don't want to see how many stops are under the 24.12 level. They don't even want to see that. The people that are supporting the market, they don't even want to see what would happen. And would we get a lot of stops under that level? And there's really, there's some support at 24.07 to 24.11, but we've tested it so many times, and there's enough length that has got in there from these four reversals. There's been enough length that has come into the market from these levels that there's going to be enough stops that when they do break this 24.12 level, I hardly think that the 382 is going to hold at 24.07. Okay, there should be enough selling under there to blow it through the nearby support levels. And then we'll really have something to watch. We're going to have to go out and pull out everything and see what we got to look at for support levels, which, are 23.83 and 23.60. So that 23.83 to 23.60, I would call critical support level. 23.60 is a level that I'm looking at that could lead to a more extended correction if we break under. That's one of those numbers that I gave on the S&P when I gave the S&P, NASDAQ, and the Dow. So that's the number that would make me convinced that we could get into an extended correction. That's a long way away. But I see there's a few things in progress here that could break the market. Whether they'll be able to do it or not, I don't know. I know somebody's trying to not let that happen. There's probably collectively a lot of folks. So,
what number do you think we could possibly see on the upside before we turn?
Well, I'm at a point now where I'm looking at it saying, well, prove it to me now, bulls. The bulls need to prove it to me because I can count the fifth wave on the daily chart. I can count the fifth wave on the 360-minute chart. I can count the fifth wave on the 180-minute chart. So I'm saying now the only way, they need to turn this thing around, and they need to turn it around so that it can come through some important levels here. And I don't even have the right numbers on here. I think, why did I do this lower one here? I shouldn't have. This is today's low, isn't it? The 1625. These numbers are just reversed, so without confusing you, they're playing with the 50% retracement right now. And the 618 is up here, which is labeled as a 3 to a 2380. So 2380, Dwayne, is no, that's not 2380. I'm sorry. $24.32, let's say. 24.32 is a 618. So they have, before I'm convinced that they're through to the downside, I need them to decisively take this out, and within 2 or 3 days take this out. Otherwise, I'm going to make them prove it to me by blowing out the high. You know, if they can't get it within a certain time frame, they should be able to mount the ammo they need to blow through that high fairly soon. If they can't do that, or if they can't get over the 618, we're going to get down and test that 2412 number, and we'll see what happens. So I'm one step at a time here. I've still got, you know, as much length as I had ever in stock. So
question from Bruce: any buy points on the pullback for natural gas?
Well, it's more of a, at this point, after seeing today's price action, it's more of a dynamic thing. Just a second here.
And the final question is from Eugene. Which gold options would you buy right now?
Well, I'm waiting to see if the 1248 level holds. Otherwise, I'll look for lower numbers. But I think you got to go out in time, depending on what you buy. But I would at least go out till October. I won't buy anything closer than that, because there's going to be a lot of volatility when it goes, and there's always a fight, you know, to really rally the thing up in a long way. The last really big shoot up rally we had was after the election, and the night of the election, you know, when it ran up $100 an ounce, and you know, in the after hours trading, but it did it. You could trade it up there. It was real volatile. It was very volatile. I can vouch for that because I had some calls on. You know, I'll tell you, once I saw what happened, it was hard to get them sold. Other people saw it too, and I kept lowering my offer. Like, you can't really sell options at the market. If you do, you're going to really get hosed. So, you know, you have to use limit orders on. You don't have to, but if you don't care about slippage of $30 or $40 an ounce, then you can do it. They're nasty. So these are the support points in here. So to answer that, I would say, you know, what I would look for here, this would be a more safe to buy place to buy, to be around 301. You know, and I would not want to get back under 298. But you know, that's just what I would do. I'm not telling you what to do. I know what my own risk parameters are, and I don't know yours, so don't consider that a recommendation. I'll also be watching this here when this thing comes back to the zero line. I'm going to set that right now so I don't forget, and let the computer do its work for me, because it's a 15-minute chart on gold. Sorry about that noise, guys. So when that thing comes down, why do I say gold? I'm crazy here. Sorry, guys. Got gold on my mind, switching back and forth. Here's where I need my stop set. Okay. When this MACD, which is right here, comes down to zero, I'll be looking at the market to see how can I construct a trade based on where the fibs are, because I know then it will have made its it will have made its way before minimum correction on this small chart here. So that's when this comes down here. I'll be more interested in buying it. Unless it takes out some bigger numbers to the upside, I'm not going to buy the breakout. Not just yet. I'll have time. If that was the low, I'll have time to get in a safer place. But I'd rather get something here. The only reason I'm not in it is I was out this morning. I had to take my car in the shop with my wife, pick her up. So some things you miss. There's always another trade. Right, Dwayne?
Yeah, boy, and I got to tell you, it's one of the, I don't know which is worse, going to the dentist or going to the mechanic. They're both painful.
Well, I got a really good guy who I go to, and I trust him. He's really good.
Yeah, when you can find a
He
good...
told me he wants to be a day trader, Dwayne.
Oh, yeah?
So, yeah. He told me he wants to be a day trader. And
you can find an honest, fair mechanic. You found a precious treasure.
Right. Well, what he did, I take it into these other shops, and they want to replace the air conditioner. He told me it was my cooling fans that weren't coming on, and the compressor won't stay running. So he said, let me just try something. He takes his hammer. There's two of them in there. He taps on the motor of one side, and it starts up, and he taps on the other one. He said, your bearings and your motors are shot. He said, they're worn out. He said, you just need to replace the motors and the fans. And he said, I can do it for you. These other guys want to replace my air conditioner.
Oh, man, you practically buy a new car for that price.
$1,000. So I'm buying I told him, well, he said, well, you buy the part, I'll put it in for you. I think he wants me to teach him how to day trade. So he's going to put in for $95 and the part's $130. So.
Did you answer Eugene's question about the gold?
I did. I thought I did.
Okay.
Yeah, on the options?
Yeah, he was looking for an option.
Yeah. I just told him how far out to buy. It depends on how much money he wants to pay. I can't pick I told him I wouldn't go any closer than October, no.
Okay.
I wouldn't buy anything shorter than that.
Okay.
Okay.
Well, fair enough. Well, Ed, thanks for everything, brother.
Hey,
good talking to you as always. And I guess based on your busy schedule, we'll talk to you in 2 weeks.
Sounds good, Dwayne.
Sound like a deal? All right, my friend.
Talk to you later.
Take care. All right.
Okay, you too.
Bye-bye now. Okay, guys, we have just about run out of time here. The long trigger on the YM was 320. I'm going to just pop through these real quick. On the ES, we were looking to sell 24.23. Had a 6-point drop. The long side of that was 32, which I guess actually got hit. We had to put in a high at 33. So there was 1 point to the upside, then 6 points to the downside, and then another 6 points to the downside. The Dow looks like a couple opportunities at 20 points on the downside. And what was the upside? 21,320. Yeah, right there. Hit 21,320 on the nose. That one didn't. That one didn't. So what soybeans did. Soybeans. 2,000. Okay, on soybeans, we're looking to sell 928. You still there, John? Oh. If that was you saying yes, I couldn't hear you. Well, I mean, I could hear something, but I couldn't hear it clear. So if you're still there, you might have to call back in. So on the beans, we said to sell 928. Consider it, and swing low was 925.50. So that would be 2.5 points at $50 per point. Pays just like the S&P, $12.50 a tick. 4 ticks to a point, $50 a point. The buy side on beans was 934, which is right here. And the swing high was 938.50, so that's 4.5. Keep in mind, we never get out at the swing high or swing low because we trail our stop. And when you trail your stop, that means you're always going to leave a little something on the table. And you can't make yourself miserable over that. You just got to learn to accept it and be happy with what you got. Okay? So 2.5 points to the downside, 4.5 points to the upside. Bonds. Bonds look pretty flat. Let's get the indicator out of the way so we can see it. Okay, yesterday we had an $875 per contract run up, and after that big move, we are handed a day of consolidation, which is not surprising. On bonds, we wanted to be buyers at 156.09, and that didn't happen. And we want to be sellers at 155.21, and that did happen. Okay. There we go, 155.21. You know, as I always say, bonds are best left for the experienced trader. And even if you have experience, at 31.25 a tick, you know, takes a special breed of cat to trade bonds. So just exercise caution. From 155.21, we put in a swing low at 155.07. Yep. So that would be 14 ticks. At 31.25 per tick. Bonds. Gold. Gold we already took a look at. Consider buying 1267. Ran up $1.50 or $150 per contract. Selling 1263, it dropped right down. Now these are this week's zones. Dropped right down to 1253, from 63 to 53. It's a $10 move. So if you're trading one contract, that's $1,000 per contract move. And it hit that zone. We consolidated at the zone, and then we made our move, and we touched it and were rejected. Touched it again and got rejected. Now we're just rolling sideways. InQ. InQ has really had a rough go of late. Okay. 2000. Yep. Right, on the NQ, we were looking to sell 56.99. It's going to be right about here. Okay, 56.99. Now, with a stop up here, it's a big stop, but you don't get stopped out. However, the least amount of risk often brings the greatest amount of profit. So from 99, we dropped to 56, 58, 75. So we dropped from 99 to 59. So that would be 40 points at $20 per point. Okay. Now, did we drop lower than that? Yeah, we did. John, if that's you talking, it's just all, it's very distant and breaking up. It's not coming through. Same thing happened the other day. On this pullback, if you're trailing your stop, I'm going to assume that on this pullback you'd have gotten stopped out, which means you would not be participating in this additional drop, which went down to 56.40. Now, the swing high right here was 98.25, and the trigger's up at 99. So maybe this candle takes us above the trigger. Above. John, is that you? No, I guess not. This would take you above the trigger and then potentially set the stage for another move to the downside. After that, crude oil. Okay, crude. $46.20. No, that's not right. I guess I haven't adjusted these. Okay. So this should be here. And it should be. I got the, when I loaded this platform, last time I loaded the platform, when I tried to go to the properties, they're not there. It's just amazing. Sometimes they load, sometimes they don't. I don't know why. 4575/80. Maybe I should do a fresh install. What's below? 44.50. There's kind of right where we are. 44.50/55. Wow, we've been walking that line since 11 o'clock yesterday. So I'm going to guess we didn't have anything noteworthy happen last night. So there's 2000. And the idea on crude was, oh, I never drug it out, so you guys can get a screenshot if you want one. There you go. On crude, long 45.40, short 44.40. Really? $1 spread. That's a lot even for me. 45.40. Well, I see what I was trying to do. I was trying to keep myself out of the slop, but I didn't quite succeed, did I? Nope. Because we put in a low here at 38, and we put in a low here at 32, and a low here at 36. Oh gosh, that's about as flat as I've seen crude go in quite some time. Huh. Yeah. It is what it is. Okay, the last market is the Russell. Okay. We had a zone way up at 1432.33 this week. Today's Thursday, so I can share them with everybody. It was way up there. 1433, 32.33. Okay. And the zone below that was 21.22. Okay. And below that was 10.11. And below that was 1390, but I don't think we've been down in that territory. No, we haven't. So the Russell spent most of the week, it looks like, oscillating around that zone, above and below, above and below. Finally tried to make a run to 32.33, but didn't make it. It did come down to 10.11, caught a nice bounce. Consolidated at 10.11 for quite a while, and ran down into no man's land. And here we are. Okay. So that's 2000. Okay. And on the Russell, we were looking to be buyers at 17 and sellers at 14. Well, 17 never happened. 14 did. As soon as the alerts went out. Actually, they went out at 7:55. Russell, so 14. Okay. That's one you might have missed. Now from here, if we take this and we draw it way over here, important prices, important areas are almost always tested. So from 14 we dropped and consolidated for quite a long time, and then we dropped for a swing low, basically a 1400. So that's 14 points at $50 a point. So roughly $700 per contract available. And then price got back above the trigger and came down again, this time to make a low at 1402.70, so we call it 1403. So that would be 11 points. So that would be $550 per contract available. Okay, now it's looking like it's going to bounce off that zone again. So there's the Russell in all its glory. Crude, desperately quiet. In Q, putting on a move. Let's see what the long side is on crude. 57.15. So that's right here. 57.15. What does this get up to? 18.25. David, how do I get the Concierge Trade Alerts? Well, you can. They're a separate product. How long you been a partner? Okay. Michael sent out an email a while back. See what I'll do. I have Michael send you an email. I've got him right here on text, and so I'll just say he'll shoot you out an email. Okay, he'll shoot you an email, Dave. Alrighty? Okay. Alright. And there was gold. It was a really nice move to the downside on gold. Although I'm bullish long term on gold. Rather see it move to the upside, but we got a trade in place. Oh, that's okay. Okay, so now the S&P looks like it wants to take an afternoon rally. And the buy side is within striking distance. Buy 24.32. It's like there's a lot of energy there. There's 3 minutes left in the life of this candle. So we'll see what happens. Well, you'll see what happens. I've got to get out of here. From mentoring sessions to invitations to the workshop to tonight's alerts. And I think my wife has a chore. It's only 113 outside, so great day for an outside project. I was supposed to get up at 6 a.m. this morning and do it, but I didn't make it. Let's see what the app says. It's currently 99. If it's 11:28 here, if I don't get it done by 1 o'clock, it's going to be 104. If I don't get it done by 2 o'clock, it's 106. Well, that's nice. We top out at 106 today. Tomorrow, 110. Saturday, 111. Sunday, 114. Monday, 119. You ready for Tuesday? You might want to sit down. 120. And we choose to live here. Well, and then a cooling trend sets in. Next Wednesday it drops to 116, then 114, and it starts to warm up again. This is when they put out like heat advisories. Little children and older folks like me. I'm going to tell my wife there's a heat advisory. I can't go outside and do the chore. They do that though, really. Heat advisories. Don't go outside unless you really have to. Years ago, I was running an office for the company I worked for up in Portland, Oregon. And they flew me back to Phoenix for, I forget. Anyway. When I got on the plane in Portland, it was like, I don't know, 45, 55. It was just cool, and it never really rains in Portland. It sort of just drizzles or mists or I don't know. Anyway, when the sun does come out a couple times a year, it's so beautiful. But anyway, I get on the plane. It's less than 60, let's say that. When I stepped off the plane in Phoenix, it was 122, I think. My body actually went into shock. I thought I was dying. I went to the doctor. He said, your body went into shock. I go, well, you know, you gonna hospitalize me or what? He's like, no. I go, well, what do? He says, go home, lay in front of the air conditioner. I told him I was just there on business. I had a little, here in Phoenix on business at the time because we lived in Portland. I said, lay in front of the air conditioner and drink lots of fluids. And you'll feel better soon. I'm still waiting. But no, I did feel better in a day. My body just had to adjust. It was really a shock to the system. So, for those of you that live around here, you know what I'm talking about. Stay hydrated if you go for a walk to the mailbox. Be sure to take your phone in case you have to dial 911 and take a gallon of water. If you're going any further than your mailbox, just you should probably take the car. Okay? All right. All right. Well, guys, that's it. This is going to wrap up another fine Thursday, 15th day of June 2017. I will see all of you partners tonight in the workshop. And if you're on the trial and you want to be in the workshop, then if you haven't gotten an email from Michael, call him 949-423-6464 or email support@cfrn.net. 949-42-EMINI or support@cfrn.net. Now, when you call and get voicemail, I can't stress enough, leave a message, okay? Because he's on the phone an awful lot. But if you leave a message, what it does, not only does it leave a message, but it sends an email to both of us that you've called, and it transcribes the message. So there's a really good chance that one of us will get back to you like right away. Here's what I can guarantee you. I can guarantee you this. If you don't leave a message, we won't call you back. Because we won't know who you are and what you want. Okay? So, fair enough? Give us your name, give us your number, we'll call you back. And Frank's sitting out there going, yeah, I'm so sorry, Frank, that I didn't see that and get back to you yesterday, but I did send you an email, and if you have any questions on that, call me, email me, whatever you need to do. But I think the instructions there are clear. Just make sure you confirm, okay? Once you schedule, then I think you get an email that you have to click a link in to confirm. So, all right, guys, love you. See you tomorrow. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.